that Azim Premji, chairman of Wipro, addressed the media a short while ago. Let's listen into what he had to say about the company's fourth quarter performance.
The demerger of the diversified business of Wipro Limited is now complete and has been approved by the board on November 1, which was originally approved by the board on November 1, has become effective on March 31, 2012. That was March 31 of last year. This has made Wipro Limited, the company, which is a public listed company, a pure play IT company, primarily in IT services, addressing to a significant extent the global market in terms of size. Overall, economic data of the United States are steady. Generally, it looks better this year, 13, than it was in 12. The US has recently enacted the immigration bill. You know, it's a 700-page document. We are digesting this fully for the implications on visas. The implications in our assessment are manageable. There are one or two clauses which there's going to be very active lobbying in the House of Representatives to see to that they're made more practical. We have consummated the acquisition of LD Watson, which was an acquisition which we did in Singapore. The acquisition helps us consolidate our position in the Far East and brings us some very strong brands. And now we hold a dominant leadership position in facial care in Malaysia. We are number one. It has also moved us to number one position in Singapore. And these are large, open global markets. We continue in Wipro Infrastructure Engineering our investments in US, Brazil, China and Europe. We have plants in all these places now. The US plants will go on stream in about, I think, 9 months or 12 months from today.
Okay, Nikunj caught up with the top management of Wipro. Here's a slice of that conversation.
We see quarter one traditionally for Wipro has been a weak quarter. And it's been a weak quarter primarily because our India business, we see a degrowth in quarter one. It's a very cyclical business. It's a business that goes up in quarter four and comes down in quarter one. The impact of that we're going to see in this particular quarter. That's quarter one. But if you look at the demand environment, we are positive about the demand environment going in, and we see quarter two being certainly better than quarter one based upon the deals that we're going to close right here in quarter one. Just from an industry perspective, if I looked at manufacturing after many years of very poor growth has shown a 3.4% increase. Our energy and utility business, where we are focused on, continues to grow. It's shown a 3.9% sequential increase in the quarter. Our soft spot has been BFSI and telecom. We see telecom growth. We expect that will come back. We see BFSI again, hopefully will come back. And to that extent, you know, we are a little more bullish about the quarters going forward than we are about this particular quarter to come.
And just to supplement Nikunj, I think the finance guy, let me say also that net income basis we have done very well in terms of 17% growth. We held on to the ETR. And also if you look at our operating cash flows has been more than 100% of the net income over the last, for the whole year. So we have managed well in terms of our receivables, managed well in terms of an inventory, and therefore whatever we have driven in terms of productivity from a price realization standpoint, it is equally from a balance sheet management point of view, and therefore overall we are starting the year with a pretty healthy balance sheet.
Pratik, do you want to comment on utilization rate as well?
So before I actually come to the utilization, let me just take a couple of seconds and talk about how it has been from people front, and part of it TK touched on. So overall, I think it just went the way we had actually planned the quarter. We had close to about 2,900 net adds. We continue to onboard people whom we had hired from campuses. That went exactly as per the plan. Our attrition from 12.9, which was the previous quarter, came down further to 12.5. But if you look at on a year-on-year basis, it's been close to about a drop of almost about 3.8%. We remain on course with regard to our salary increase schedule, which, as TK mentioned, is in June. And as we get closer to that time frame, we'll take a call in terms of the quantum and size of what that increase could look like. Utilization is as much a factor of how we are actually bringing people on board, and this traditionally is the quarter when you have a lot of them joining in. So you have not seen any movement from the previous quarter as far as the utilization, whether you look at it with trainees or without trainees. But we think certainly there is headspace for us to be able to pull it up further, which really is going to be the endeavor in the quarters ahead.